Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Thursday, August the 9th. Another consolidation day, a whole lot of nothing last couple of days, and it's actually healthy since the run-up we've had for the last 5 6 trading sessions. But we are in the summer doldrums, and we really need to expect that. I would personally like to see a decent pullback so we can buy into this pullback and hopefully set a little bit of a rally going in the next couple of months. But market really didn't do much today. We basically had a little bit of weakness in the morning and then rallied into the close. You can see that here in the 10-minute chart of the S&P. And now we're just basically consolidating. Last night, China came out with some okay numbers. They beat a little bit. And I saw the futures up about 4.5, 5 handles. And now trading lower, down about $1.50, right about now, about 5 o'clock in the morning. So markets are no question getting tired. There's still market divergence in the air. And until they unwind either that overbought conditions and or markets start to trade in sync with each other, there is a pullback to be expected. There's no question about it. Are we playing on the long side? Sure. If there's markets are trending higher, that's what you should be doing, is playing the long side. Until then, I would not be looking to pick a top. Let the market decide. If we are headed lower, then we should be breaking some key pivotal lows. That would give us a confirmation that the market is at least pulling back and taking a break from the upside. Now, we're going to be headed into some heavy resistance. 1400 has been capping for the last couple of days. Can we move higher? I wouldn't doubt that we test the highs at 1422, 1424. It's just that's what happens when the market breaks above a certain key area, and we're only about 15 to 20 handles away. It would not surprise me at all in the least that we actually open the doors for one more push higher. At that point, I would be aggressively looking to short the market at 1422. And you have to understand here, even though that there's nothing going on and the markets are just buying this market up, and a lot of the quant guys and the high-frequency traders, that's what they do. They probe the market higher, and when there's no resistance, the market will continue higher. So it's really a false move here. And you have to understand that, and you also really have to recognize that any news coming out of Europe at any time can quickly cause a big market sell-off. So I think there's something big brewing here, at least in the next 2 to 3 weeks. I could be totally wrong. Not actionable to trade, just to watch and use caution here, headed into the next few weeks of the summer. Don't forget, with light volume, the markets can get skewed and get pushed and extended either up or to the downside. All right, so let's take a look at some indicators here. Really not much to tell you. I don't want to sugarcoat anything here. Our McClellan oscillator has continued to be shopping around negative 30, plus 30, as you can see, for the last for a good month. So we've been really doing not much of anything, and this tells me that the markets can really go either way, up and or down. So that's something that this indicator is not telling me much. One thing that I want to show you is the VIX. And this is telling me that we have extreme complacency in the markets. And this is what also scares me, that when investors and traders are very, very comfortable and really don't care about what's happening, about market divergence, they just continue to buy this market up with no volume. And I'll show you in the indicators here. I mean, in the S&P charts. This is a concerning, very concerning here to me. So we had a bull wedge. We broke back. We did back test, and now we're actually breaking back below this area here. So maybe the market does flush one more time, pushes this at extreme lows, and then we rally. But that's something that that really is concerning, that we have really a crowded trade to the long side. And put call, same thing. If you see the put call ratio, we're in this bullish, falling wedge configuration. So if this put call ratio starts to increase and starts to break out, I think you'll have some continued selling, but not until then. Again, overbought or oversold is not a signal to go long or go short, because it could be overbought or oversold for extended period of time. Just please make note of that. Let's take a look at the copper, and then I want to show you Shanghai. Now, copper, a leading industrial metal, really had a good bounce, but to me it looks like just a dead cat bounce here. So we really want to keep an eye on it. It's not telling me much other than the metal is still weak. Could catch up, absolutely, but still really not telling me much here. I'd like to see this start to really maybe take a little dip lower and start to break out this double top area, 355, and then of course that 200-day moving average come in at around 358. Once we break that out, then I could see someone saying we have a decent market here. Now, Shanghai has been oversold. We had mentioned that. We broke that key pivotal low of support, rolled back down, made a couple of days lower, and then actually started running back up again. So this is to be expected. Now, if we can chop around here and start breaking these areas here, 2200, 2250, then I could say, hey, you know what, this could be overdone and we're actually going to move higher. But China is known to skew their numbers, so we need to really be cautious about that. But if in fact the market likes it, you need to realize that, and we need to be continue trading with the market side here. Okay, U.S. dollar. U.S. dollar, again, guys, still chopping around. Really nothing has changed in the last 2 to 3 days. We had, other than a small grind higher in the market itself. So the dollar actually sold off, as you can see, but held this 82 area. Still chopping around here. Nothing really new to really report here. Needs to get back above these averages and, of course, take out this high. And again, if that does, then we are going to see some weakness in equities. Now, I wanted to show you the charts. Let's get into the technicals here. This area here I put in this red line is heavy resistance. And we are now sitting above this bearish rising wedge. We broke back on this dotted trend line, and we're above this 76% retracement. I do see that the markets are overbought, but we have not have any signs that the market is actually rolling over at this time. But if you dial down to the smaller time frame charts, which I want to show you, 60-minute, we have divergence on a 60-minute chart here. And I want to show this to you on stock charts because I get just a little clearer picture. We have our MACDs rolling over. So if you realize, if you look at all of the higher highs, right? Lower highs, higher highs. And if you see how strong these indicators were, the RSI 5 and the RSI 14, we actually reached overbought. Now this time we're higher, if you could see here from this previous high, but we haven't reached that plateau, which is telling me that the momentum in the markets are exhausted. So this is a perfect example of how we could see how this market will roll. It's only a matter of time. Even if it get one big push higher, I think the markets are still going to be ready and due for a quick pullback. Now, in order to time this, we don't want to just blindly just go out and short the market today or tomorrow. We want to see this market at least take the previous pivotal low out and then look to get short. Now on the if you see the stochastics is starting to flatten out here. MACD's totally momentum here. MACD's are already crossed over and rolled over. It made a lower high from the previous high. So this here is a big tell sign that, hey, markets are getting tired here to the upside. So something I wanted to point out, really important, especially if you're day trading. Let's dial it down to the 15-minute chart now. The 15-minute SPX chart is the cash index showing a head and shoulders pattern, bearish pattern. However, it is not triggered until it breaks this neckline area. Until this neckline gets broken, 13.99, call it 13.98, give it another point or two, then we can have a trigger in this neckline. And this is a 15-minute chart, so let's say 13.95 to 14.10. So you're looking at 18 S&P points. So that would put you back down minus 18. You probably put you back down into this area here. Okay, so small head and shoulders pattern, 15-minute chart, not as much as reliable as a 60-minute or a daily chart. But if the 60-minute showing market divergence, telling them that the indicators are tired, this could be a pretty decent pattern here. We'll see how we open because this actually could possibly trigger today. Okay, let's go into the SPY just to show the volume. Look at the volume. This is not really what I want to see. Despite that we are in the summer doldrums, I would not want to see this lower volume here. At least be consistent where we are. But 1, 2, 3, 4, 5 days up, and volume has tapered off dramatically. So this is really and we're at the upper end of the Bollinger Bands, upper end of our bearish rising wedge. So to me, a pullback is totally imminent, and we are in this area here where you can see we have this this topping area in the spider. So something to take note of. Not that we want to short the market. There are a lot of good long setups, I will tell you, but the long setups haven't triggered, and some of them have. But playing breakouts at this time, at this level, is definitely not wise to do. So I have a lot of stuff on the watch list I'm watching, and a lot of them has triggered, but they've just, as soon as they trigger, they roll right back down again. So what's moving is really what's showing me is the indexes are moving, not the individual stocks, and that's why we haven't really been doing much the last few days because we want to make sure that we won't buy anything and all of a sudden the market rolls over and then now we're taking our stop. So we don't want that to happen. We want to make sure that if you are buying something, you're buying something that was weak. We had some good catalysts, and good news come out on the stock, and then a market rally from there. Then you got plenty of room to the upside. Just something to take note of. Okay, our transportation ETF, IYT, again, head and shoulders pattern, symmetrical pattern. Which way is this going to break? So we have two patterns here, and we're just going to wait until which way they break. If this thing breaks to the upside, symmetrical triangle will take precedent. Okay, we need to break above the right shoulder though, and even take out the head, and then that'll give us precedent. And if that happens, then we'll probably have a little bit of buying coming in the markets as well. Now the IWMs and Russell did break out, consolidate above this trend line from July. Still constructive for the bulls, but I see the volume here again very low. So just keep that in mind, guys. There's a lot of stuff that doesn't look right. And that's why I keep saying that eventually at one point we should get some decent sell-off. I think it's actually very soon that I think we're going to get one shortly. SMH, the semiconductors, great run. Actually, technology really picked up steam. The XLK, same thing. But this is something here that is actually very constructive. And again, a pullback would be healthy for the markets, especially at these levels. All right, big cap tech, same thing. But look at what's happening here. Big cap tech had rallied the last 5 days pretty nicely. We're in this heavy congestion area, but look what's happening with the volume since mid-July. Totally tapered down. So, again, these are warning signs. Nothing to say that, hey, we got to short the market here. No, I wouldn't. I definitely would be hedging your for your long-term portfolios. I would be definitely hedging this market. If you feel the market will go higher this year. If you feel the market will go higher, then you want to put on some hedges. If you feel you want to take them off the table, maybe take half off, would be ideal. So just something to take note of, guys, all right? We are in the summer doldrums, so it'll be interesting to see what happens today. We have initial jobless claims come out. And as you know, jobs have been really tapering off. We did have a little bit of good news in the non-farm payrolls. But to me, like I said, it's all about news. And if we need one negative catalyst in this market, and I think everybody runs to the door. So let's keep an eye on that. And if you're day trading, let's take the best setups possible. And if there's nothing to be had, I'm always looking for what the next day is going to bring us, okay? All right, guys, have a great day, and we'll talk to you tomorrow. Take care.